Trebi Hammond, exactly 3 minutes after 9, and that was Wara by Kwesi Arthur. Anyway, so we get into a roundtable discussion this morning. Today, like I indicated a while ago, we're talking about something very important. Now, as you are well aware, Ghana is at a very key turning point. We're transitioning out of our IMF supported program and asking a very big question. What comes next? Are we truly on the path of sustainable recovery, or are we simply repeating a familiar cycle with new numbers? Now, on paper, we are seeing signs of progress. Of course, we've talked about easing inflation, some stability in the CD, and improving investor sentiment and all of that. But on the ground, many people, many businesses and households are still dealing with high cost, tight credit conditions and economic pressure that hasn't fully eased. And so this morning, we are going beyond the statistics. We are asking the real question about discipline, about debt, about policy consistency, and whether we are able to sustain the stability without external support. And to help us break this down, I'm joined in studio by Mark Jordan Sika Nate. He is a senior research associate at Lauros Africa Securities, and he joins us in studio for this conversation. We also joined over the phone lines by Nelson Kujo Kwagbeji. He is a financial analyst, and he also joins us for this all-important conversation. Gentlemen, good morning. Good morning.
Yeah, good morning, and then thanks for having me.
Sika, thanks so much for coming in studio. This morning we go way back. You know, when we're students back in the university, we're both students back in the University of Ghana, and I'm glad to see what God is doing with you all over. I see you on big platforms. It's a pleasure to have you in studio this morning.
Sure, thanks.
All right, and also Nelson is over the lines. I'm getting some feedback from Nelson's end. I don't know. We'll have to fix that. But maybe we can begin the conversation while I get that resolved. So, Sika, very interesting turn of events. We are told that we are exiting the IMF program, and a lot of questions are on the minds of many people, especially people in the business community and even households, individuals, and all of that. Let me begin with this, and I want us to begin broadly. Looking at the journey so far, looking at where Ghana is now compared to the peak seasons that we saw, inflation skyrocketing to about 54% thereabouts and all of that. How would you describe the journey so far?
I think thank you. That's a very interesting question. I see that given the way it's been broadly defined by many who've been asked a similar question, or colleagues like myself in the space, right? I mean, we all hear that one thing called recovery, yeah, and I mean, clearly that's been it. I would say we've largely been in the recovery phase. Trying to find our feet and trying to put our economy back on track. Has it been successful? Yes, to a large extent, and I think really that's what it has been, because drilling down to, I mean, on the broader perspective, when you are looking at it from the macro dynamics, right? Moving from about 54 in about 3 years ago, and then looking at where we are right now with latest print around 3.4, and also gauging from the fact that previous inflation was highly driven by food prices, and with complement from the non-food side, we see some broad stability across these two inflation components, right? And in terms of growth, it's been quite robust, and on that front. And in terms of our reserves as well, we've been able to, build some ample reserves. And so that's been the story. But in terms of it being complete, I think that's where we are still hanging, whether the recovery is fully complete. Yeah.
So what would you say? What would you say to that? Do you think that Ghana is exiting the IMF program? Are we out of the woods? Do you think we are out of the woods yet?
Yes, I would say we are out of the woods. At least where we were and what took us there, we are out. You know, and that still takes me to my earlier
Submission.
Submission where I was trying to compare the macros where we were prior to the IMF and then where we are now. And so clearly you could see we are out of the woods. I went to the IMF with a really depressed reserve levels, really high debt levels, and we also had our currency with very high volatility, at that time.
Yeah.
And there's all these fueled into prices, right? Inflation is skyrocketed, and I think more interestingly, we also saw interest rates, inflation dynamics feeding into interest rates.
Yeah.
Interest rates, at a point, government was borrowing on the treasury bill market, even for a 91-day, like around 30%, And that meant that businesses were crowded out of the, credit markets because, if government can offer you about 30%, you go buy the paper, go to bed. You won't need much work to, lend to the private sector guy. But we've seen quite significant turnaround in these dynamics, to put it into perspective, I think at the start of this year, I had my bankers reach out to me for loans and stuff. This wasn't the dynamics back then,
Yeah.
So I would say that this is what it is. But for me, the completion really, I would term it a strong recovery so far.
Okay.
However, we still have some way to go,
right.
and that makes it partly incomplete.
Okay.
Yes, because then for you to really truly define it as complete, then you should have some confidence to be able to see it in the foreseeable future.
Right.
And I think currently when you look at the investor sentiment and the tone on the market, we are still in that uncertain mode whether the recovery is truly complete.
So you're saying that we are partly out of the woods?
Yes.
All right. Let me bring in Nelson now. I think I have Nelson over the phone line. So Nelson Kujo Kwagbeji is a financial analyst, and he also joins us for this conversation. Nelson, good morning. You're welcome.
Yeah, good morning, my brother, and thanks for having me. And good morning to my brother in the studio.
Good morning, Nelson.
All right. Do you guys know each other?
Yeah.
Oh, okay. All right. Since you're in the same space here, it's understandable. All right, but Nelson, I was asking Mark Jordan a while ago whether, how he would describe the journey so far with what we saw in terms of our inflation, our macroeconomic numbers, and all of that in previous years, and how would he describe the journey so far? I want to hear from you on that same score.
All right. Thank you very much for having me. Well, the journey has been interesting, looking at where we were, what actually took us to the IMF, what we have done within this period, and what the current status of the economy is. We can only say that the journey has not been easy, but with resilience and commitment from the fiscal and monetary authorities, we've been able to turn things around as a country. If you recall at the time, it was purely as a result of fiscal mismanagement that actually took us to the IMF. Even though the politicians are actually blaming it on externalities, looking at it purely from an analyst point of view, it was actually the fiscal mismanagement that actually took us to the IMF, because as at that time, we overborrowed, and just as my brother said, even the 91-day treasury bill, we had to, because now you are risky, investors are demanding for a premium. And government was borrowing even 91-day, treasury bill at over 30%.
Yeah.
And that tells you that at then, there was no confidence in the economy. The economy was rated as a giant economy. And so we had to go to the IMF in order to inspire a certain level of credibility, policy credibility, and confidence within Ghana's economy. And you must know that most of these offshore investors, once they know that you are under an IMF program, they get some level of comfort. So, I mean, that comfort actually brought some level of stability and policy credibility into the economy. And since then, we've been able to, turn things around. Now, going forward, the question that we need to ask ourselves fundamentally is, how do we sustain these gains that we have made, number one? Number two, how do we prevent ourselves as a country from going back to the IMF? You see, because once you go and exit, next time you go and exit, it means that when the headmaster is not in town, then the students are, jumping exit. You get it?
Right.
And so once the headmaster is not there, then we start doing things the way we used to do it. Over financing of political campaigns during election year, we overspend, and then we come back after the election to come and correct the mess that was created in that particular election. So going forward, the question basically has to do with how do we sustain the single-digit inflation? How do we sustain the currency stability? How do we continue to build our reserve to support, the currency? How do we grow the economy to generate jobs? How do we rake in enough domestic tax revenue? Because see, if your expenditure is 20 and your estimated revenue is about 10, it means that you have to go and borrow to finance your budget. And so your domestic tax revenue mobilization is key post-IMF. In fact, I was saying it on another platform that if we fail to tax the informal sector to rake in the needed revenue domestically, then our chances, because you can be fiscally prudent, I will not spend it, But once you are not raking in the needed tax revenue to support the expenditure, then we may end up going back to the IMF. However, with the kind of demonstration that we have seen from the current finance minister and the governor of Bank of Ghana, some of us as market players, we have the confidence that we may not get there again because, some of these economic situations are highly political in this country. Party A would say, who was able to take the Ghana to IMF? This one will say, during my time, I have not been able to borrow externally, but I've been able to do this. And so this whole IMF story is highly political in this country. And so we believe that the current finance minister and the governor will not sit aloof for the gains that we have made to, be eroded.
Right. Okay. We'll look at some of the specifics very, very soon. But what would you say has been the most significant shift since we entered the IMF program?
Well, if you look at the macro fundamentals, they have significantly improved. If you look at them one by one, you could see that the status of those indicators as at the time we went to the IMF and the status of those indicators today, there has been a significant shift. And also, in terms of policy direction, we have seen some level of a shift in terms of fiscal prudence. The government has been very prudent as far as the expenditure control mechanisms are concerned. And so that has actually culminated into some level of, savings to the government. Because if you are able to control your expenditure and even maintain the same level of revenue, then some way, somehow, you are good to go. So I would say in terms of the macro fundamentals, there has been a significant shift. In terms of government policy initiatives too, for instance, if you look at the GANRAP, the Ghana Accelerated Reserve Accumulation Program, it's a very brilliant and fantastic idea because as soon as you continue to build your reserve, what it means is that you are putting flesh, you are putting muscle to your local currency, your functional currency. But once you begin to deplete your reserve, it means that your currency will tend to become skeletal. And so that policy is a brilliant one because now we are the leading producer of gold in Africa. And so if we take advantage of that to build enough reserve, you will realize that in the medium to long term, we will have a city that is stable, that can support the economic growth and development. So in terms of shift, I would say the macro fundamentals have done very well, and also government-owned policy interventions are really working in their favor.
But just to stay on that a bit further, what matters more, especially at this time? Is it the macroeconomic numbers or the lived experiences of the Ghanaian people and also businesses?
All right. I think this is not the first time you are asking this question. In other words, those macro fundamentals that analysts are saying, oh, the economy is good, is it really benefiting, the ordinary Ghanaian on the streets? Yes, if you look at it generally, some of these macro indicators may not immediately readily transform into, gains or benefit for the ordinary citizen. But we have to look at it, on case-by-case basis. For instance, if you take lending rates, okay, I've always been saying that when you took SMEs, private sector, with high lending rates, they will not grow because you can't go to the bank and borrow at a rate of 30%. And let's say you take 1 million, end of year, if you are using a straight line amortization about 300,000, which business will you do in Ghana and be paying 300,000 annually as interest or finance cost? And so if you look at the interest rate at the time and compare it to the interest rate today, you see that there has been a significant, shift.
Right.
For instance, Ghana reference rate for this month, I think it's around 10.2%, which means that gradually, we are expecting the lending rate to further dip. Again, we have a governor who is more fixated on achieving single-digit lending rate. So it means that once lending rates are coming down, business confidence is also bouncing back. Again, if you look at consumer confidence, inflation is at single digits. So the rate at which prices will increase, we expect that to be lower. And that is going to enhance, the disposable income or the purchasing power of consumers. And that will bring back some level of consumer confidence. And so I would say, on case-by-case basis, we can draw the conclusion that the macro fundamentals are yielding to the benefit of the economy.
All right, so let me come in studio and come to Mark Jordan. Now, Mark Jordan, we are transitioning, from the program. Out of an IMF program. In simple terms, what does this exit really mean for our economy?
Yes, thank you for that. So, first, we had a challenge that took us there. So, if we are exiting, it gives some sense that we've been able to deal with that challenge considerably, And these are the challenges.
I like the word considerably.
Yes, considerably. I think Nelson touched on these number of challenges, so I will not go back to stress on them. Right. So that's what it means. One, but on another level, right? What it actually means is we are now going to look at internally driven discipline, fiscal discipline, rather than like something that was fueled by an external dynamics, because when you go to the IMF, you are given some parameters, and key benchmarks that you have to meet. And what we had initially, the 3 billion program was financed back, you would have some budgetary support, So because of what you would expect from them, it puts you on your toes to, deliver on the benchmark that you two have agreed as parties. So moving out of the IMF, first, the positive is that considerably we've been able to deal with some challenges.
Right.
The other side of it also is that we are now going to tell ourselves that we'll do ABC. For instance, keep our primary surplus, around 1%.
Okay.
And then we should be able to deliver that without anyone, being on our neck to do so. So largely that's what it means. And I think the third would be that, government has relief from, certain things that certain dynamics that were capped. For instance, employment in certain public segments, public sector, and certain parts of the public sector was capped because of the program. So I think now government can now analyze its wage bill and consider whether it would want to, employ some people, on that side.
So it's going to affect jobs. It's going to affect several parts
exactly,
of the economy.
Exactly. Yeah.
Let me go back to Nelson. And Nelson, I want you to hear your thoughts also. I mean, Mark Jordan earlier on said that he thinks we are almost, or maybe partly out of the woods. I also want to ask you the same question. Do you think that, exiting the IMF automatically means that we are totally fine or we are stable now?
No, it doesn't mean we are totally fine. It doesn't mean we are totally, out of the woods. One of the major problems of this country has always been leadership. Because in as much as we are thinking of macro fundamentals, which are quantitative in nature, we must also look at the qualitative aspect of it, because you cannot do analysis based on only quantitative data. The question is the tone at the top, the leadership. Do we believe as analysts that, leadership will maintain whatever stage that we are now going into the future? Do we presume or assume that, okay, in 2 years' time we are going to have elections, so we are going to derail all the gains that we have made? So these are the relevant and important questions that we have to be asking ourselves. We are not totally out of the woods. You will even realize that the relief issued by the Ministry of Finance, there is an extension of the program, but this time around it's non-financial.
Right.
In terms of technical assistance, in terms of technical competence to assist, the managers of the economy as to which direction to maintain. So if we are actually completely out of the wood, I don't think government will extend the program, non-financially. And so I will agree with my brother that yes, we are not out of the wood yet, but going forward, discipline is going to be key. Fiscal discipline is going to be key. Will be very, very important in terms of where we are now and how we want to go into the future from here.
Right. I think Nelson just touched a bit on, and I'm talking to you, Mark Jordan. So Nelson just touched a bit on something that makes this particular exit different from previous ones. I know we've been there before. We've exited and had to go back and all of that. What do you have to add to that? This particular exit, what makes it different from previous exits from the IMF program?
Okay, I think when you read from the exit report published by the IMF, they are clear on the fact that very key benchmarks have been met by this program, and that makes the exit to some extent healthy for Ghana. And so I think it's a key standout compared to the one we exited around 2019, which was will I say, was a negotiated exit, at that time. Right. And I think certain key benchmarks were not fully met compared to what we are looking at in this particular exit. And I think that's what gives investors some confidence, right? When you check the macros, like Nelson mentioned, and in terms of reserve, we are exiting this program, right, with inflation even lower below the BOG's medium-term target.
Right.
And that creates some buffers, at least within the next months ahead of us, should we even face some challenge, right? So I would say that what makes this quite different is the fact that we've been able to build considerable buffers.
Right.
Even when you check from reserve position, the last latest summary of economic data released by the Bank of Ghana in March, right, showed a reserve for February about 14 billion. and that meant we had an import cover about 5 billion, right? And so that creates some ample buffers against the medium-term target of 3 months of import cover. You get it?
Yeah.
So for me, in sum, we're exiting this one with some considerable buffers. But yet again, like Nelson mentioned, the tone at the top and then discipline and leadership is really the concern going forward. Yeah.
Exactly. So I was going to come to that. What exactly do we need? I mean, can we realistically maintain the stability? From the look of things, can we realistically do that? And what needs to be in place for us to be able to achieve the stability that we are seeing?
Great. It is possible. Looking at the trajectory in terms of inflation, growth, and interest rates for over 15 months, we were able to keep our grip on inflation, pushing fueling disinflation for over 15 months as a country. Yeah. So what really stops us from doing that in coming?
Mind you, the things that, I mean, the injections from BOG and all of that made us record some of these numbers we are seeing are not going to be able to be done in the coming months because BOG recorded some losses. I stand to be corrected. How do we maintain this going forward with the losses that BOG has incurred?
So I think I won't like to go much into the losses with the BOG side, given the dynamics around it, right? But what I can say is that from a policy perspective, right, the BOG still stand firm to, support, should I say, macroeconomic dynamics from the monetary perspective to complement what government is doing on the fiscal side, right? So going forward, you don't expect the BOG to still do the 10 billion, the billions of dollars in injections in the FX market, right? But I mean, you have a central bank which is trying to correct the fundamentals in this market. Trying to consolidate our remittances, making sure that the FX we gain as a country, they stay in Ghana, and so that we can use it to fund our imports and the likes, right? So I believe we had a fundamental challenge that took us into that situation that caused such heavy lifting by the central bank. And so if you are solving those fundamental challenges, then I don't think you still need to be doing that heavy lifting like year by year.
What are the fundamental challenges?
I mean, the leakages in the FX market and also, the whole foreign exchange market and even how we consolidate our foreign exchange gains. I give an example. Now, we have the gold board, which is going to handle our gold, our gold export is, I think it now becomes the sole entity to handle gold export and the likes, So that helps us to consolidate gains from that segment of the market. Now, maybe I should put this in better context. Imagine this amount of this value that we are getting from gold. Like last year, we made billions in terms of export from gold. Now, if we didn't have that structure that consolidates that gains for governments, that meant that we're going to have this FX gains in the pocket of other people, which will not be to the overall benefit of the country. But we now have this structure in place that would help going forward. You get it? Yes, great. So that's one example on that front. So when these fundamental challenges are solved and the issue of BOG having the rates, Abuchi having the dollar, solving these fundamental challenges will help keep the FX market afloat. Yes, we are not.
All right. So let me to you, Nelson. Now, is there anything you want to? Oh, you are done, right? Yeah. Okay, Nelson. Is there anything you want to add to that? The same questions.
Well, I think I entirely agree with Mark. And there are still fundamental issues within the market that has to be addressed. But I think the best foot forward, or the best way to go about it, has to do with the enforcement of Bank of Ghana regulations. You know, I kept on saying that if you read Section 3 of the Bank of Ghana Act, it gives the Bank of Ghana a primary mandate, and that primary mandate is to maintain price stability. And then when he went on to Section 4 in the other section, he also talks about certain secondary, functions of the central bank, which has to do with maintenance or maintaining currency stability. And Bank of Ghana can only do that through enforcement of its rules and regulations and directives to the market. I mean, last year, if you recall, there were so many directives from the Bank of Ghana to the FX market. One of them I recall was when you go to the counter to withdraw cash deposit or whatever, transfer into your account, foreign currency account, you'll be paying, is it 10% or 5%? This is a policy intervention that the Bank of Ghana wants to use to dissuade people from withdrawing dollar from the counter and sending it to Abochi.
All right.
You get it?
Yeah.
Because at the end of the day, when you go to the counter to withdraw money and they charge you 10%, and you take the dollar, when you take it to Abochi, you get lesser than if you exchange it at the bank rate. You get it? So some of these interventions are very, very important in order to maintain the sanctity of the FX market. Right. Now, last week, there was so many news in the media that, the CD is still under pressure because there was not enough intervention from the central bank. And I even recall the central bank issued a statement giving a clear indication that they have enough FX to support those who actually need the money. So I think that from time to time, Bank of Ghana needs to actually come up to enforce its regulations so that we can have enough FX within the official banking system, so that these Abochi guys will not take advantage of it. Because even if you look at the spread between the Bank of Ghana rate or the interbank rate and that of the Abochi guys, the spread is just too much. And then if you take the Forex Bureau, their rate and that of Abochi, you see that the difference is too much. So we need to make sure we try as much as possible to dissuade some of these operations. Every country has what we call a parallel market or black market. Every country does it. But we need to try as much as possible to dissuade the Abochi gas from influencing the price. Regarding the buffers, yes, it's very, very important. And the reason why I mentioned earlier that I'm so happy that a legislation has been given regarding the gun wrap. And so that is what is giving, market players and the business community some level of comfort that, because this is purely, backing, is being backed by legislation, we should be able to build enough reserves. Right. And those reserves should be organic. Okay, in the past, what normally happens is that we go and borrow and use that borrowed fund to build our reserve. So it was not organic. We were just renting the reserve. But now we need to own the reserve. We need to build it organically so that, we don't have to go and rent it anywhere.
I see. So still on the whether we can realistically maintain our fiscal discipline, where do you also stand? Mark Jordan talks about where the numbers are today, compared to where they were in the previous times where we went back to the IMF. Where do you also stand in that? I think you mentioned discipline earlier.
Yes.
As one of the
things. I still believe that looking at how volatile and highly political these economic issues are, and these issues are very, very important when it comes to election, I still have confidence and believe that the current managers of the economy, the Finance Ministry and the Bank of Ghana, will still maintain that prudence as they have done for the past 15 or how many months they've been in power. This is because we cannot always continue to go back to the IMF when they are out of town. So in terms of discipline, I personally have the confidence. Recently the government passed the Value for Money, Act, establishing an office to actually check, monitor the, pricing or procurement related issues of government. And this is very, very good because in the past, one of the factors that actually, shut up government expenditure has to do with overinflated contracts. You remember?
Yeah.
Overinflated contract. And so once this Value for Money office is established, we expect that every government procurement related contract will pass through that office. They will vet it. They will know the actual cost of whatever the government intends to do. And I am sure that with the establishment of this office, fiscally, we can make some savings in that regard. We can make that regard. And there is also another comfort coming from the government, which has to do with the coordination between the Finance Ministry and the Bank of Ghana. You see, in the past, we haven't seen that level of coordination. You get it. The Finance Ministry will go and borrow. The Bank of Ghana will report the figure. And then when things go haywire, then the Bank of Ghana must step in to start correcting whatever. But we have seen that level of policy coordination. And that is how it's supposed to be in every country. I mean, fiscal policy, monetary policy, exchange rate policy, structural policy, all these policies must be coordinated. You see, if we are all working independently, we are not coordinating our efforts, it will mean that somebody will go and mess up somewhere and another, entity will be compelled to actually correct that. And so policy coordination is very, very important, and we have seen that also under this government. So given all this background, I believe strongly that going into the future, we will maintain the fiscal discipline and then continue to sustain the gains that we have made.
Now, I see that you have a lot of confidence in this, the current managers of the economy. My question is, what happens when they are no longer in office? What happens in that particular situation? And also, how do we make sure that there are things in place that will not take us back to IMF even after this government?
This is a very good question. This is a very, very good question. And this has been the problem of this country. This has been the problem of this country because one government will start a policy, which is a brilliant one. Another government will actually come and say, okay, we are not interested in this. And for me, the reason why I mentioned earlier that the GANRAP program of policy, which has been given legislative backing, is very, very, very good. Because if any government wants to come to power and cancel that or repeal that act, it must go through Parliament. And I'm sure it is not only Parliament that will have a say. Civil society organizations, trade unions will have a say, students will have a say. I mean, ordinary Ghanaians will have a say. And so for us to maintain some of these brilliant policies into the future, what we must do is to try as much as possible to give it some legislative backing. So that when the government comes, it will be very difficult for them to actually repeal it. If you recall the One District, One Factory, all this program, Agenda 111, I mean, government will come and say, okay, fine, we are not interested. Then it means that all the taxpayers' money that we have sunk into this project, they will go, wasted. And so we just hope and believe that when power changes or when new administration takes over, they will continue to implement some of these brilliant policies for the stability of the economy and for the benefit of consumers, business, and investors in general.
All right. Okay. Let me come back. But just before that, let me announce the phone lines in case anybody wants to join the conversation. So if you just tuned in, this is Business Breakfast on Z101.9 FM with me, Nicho Hammond. And this morning we're talking about our exit from the IMF program and whether we are able to sustain the stability that we are seeing in this country or in the economy. You are free to join the conversation. Send us a WhatsApp on 05421019 and I'll read your messages. You can also call us on that same number or call us on 03039 and then we'll give you the opportunity to share your thoughts with us this morning. We're streaming live on Facebook at ZFMGH and on YouTube at Z Multimedia. Please feel free to drop a comment and we'll read them for you as well. Let me come back to you now, Mark Jordan. Now, let's move on and talk about investor confidence. I think you mentioned it earlier, or was Nelson? I'm not too sure, but one of you mentioned investor confidence as one of the things that will be restored or has been restored, basically. Are we really at that point where we can say that investor confidence is fully restored? It's been it's fully regained in this country, both locally and internationally?
I think that's a great question. And I'll start from the local perspective, right? And then move into the international perspective. Because, these two guys look at Ghana in two different lenses.
Right.
Yeah. So I think locally, right? To some extent, about 80% restored from the pre-macro downturn, right? And I say that given how investors are placing money on the market as it stands now.
Right.
With what we are seeing in terms of T-bills dynamics, government missing targets and the likes, these are dynamics that do happen, given liquidity levels in the market. So one of the gauge is to check how long investors are willing to hold government securities and how they are able to extend their maturities in government securities and the likes. Right, it's a good indicator of confidence in the government, right? And looking at how the dynamics has been so far, I think yes, we've been able to achieve about 80% confidence restoration.
Okay.
You check the bond market where long-term, long-dated papers are traded. When we went into the downturn, and I think in the earlier years of the IMF program, look, it was hard to even see about 100 million in volumes traded on the bond market, right? But as I speak to you, yes, we've seen considerable improvement.
Right.
I would say that trading activity on that end has to some extent returned to the pre-IMF program levels, with weekly turnover now comfortably about like $1 billion on that market. But when we went into the downturn, the market was highly at the short end, with investors, just trading the treasury bills, because you were really uncertain on what the future was like, right? So I think that dynamics give a sense of confidence, and not also switching into the equities market, right? I think same is also for the foreign guys.
Yeah.
We've now seen some foreign participation in the market, but yet again, their confidence is still around the currency, which takes time to build.
Right.
So that will take some time for them, and it's quite understandable. Okay. And even beyond the fixed income market, into the equities market, which is highly should I say, risky and quite long term. If you check how confidence has been able to build up in the equities market, with weekly volumes now above macroeconomic downturn levels, right? And also one important indicator is how comfortably investors are willing to place funds or participate in initial public offerings by these companies, or how confident these companies are even able to look into the capital market to raise funds. Because usually when confidence are down, you see investors running to save, having demands. So for you to see investors coming out of this shell to go into risky assets with improved risks compared to treasury securities, it gives some level of confidence on that front, because in the last, I could say, in the last 12 months, we've been able to record about 3 IPOs on the capital markets, and that's a good sign of confidence.
Right. So, what risks could actually derail that confidence?
I think that's what we've been all talking about all this while, and it's about the fact that are we able to sustain the gains we made from the IMF program? Are we able to keep fixed income rates at its optimal level? At its optimal level, I don't necessarily mean always declining, because these rates they reflect true market dynamics. You are pricing in inflation, you are pricing in other risk premium, default and maturity risk premium and stuff. I don't want to sound technical, right? So how well are we able to balance it at an optimal level so that other markets can also see boom, like the equities market, Yeah, so that's literally it going forward.
Right. Okay. Let me come to you, Nelson. Do you have anything to add to that?
Well, I think he has said it all. He has said it all. The dynamics in the market currently shows that investor confidence is actually bouncing back.
Okay.
I mean, if you look at the Ghana Stock Exchange, their composite index, I mean, they are doing very well. Market capitalization has also shot up. Yeah, if you go to the Ghana fixed income market, I mean, per the report from the market, I mean, volumes have been going up. And so clearly we can see that, investor confidence is actually bouncing back. And even the government itself, the attitude of government, I mean, since they came, they've been able to honor all their debt obligations after when they fell due. So clearly, I mean, that is what investors want. They want to give you their money. When the time is up, you give them their money back plus interest. And so once government is able to do that, and also inflation is not eating into their returns, they are okay. So we can conclude that, yes, investor confidence is bouncing back, but there is still more room for improvement.
Okay, I'm looking at our time, and we have to be wrapping up very soon. We saw the levels of debt that we recorded, previously before the IMF came in and all of that. Nelson, and I'm coming back to you on that. What do you think are the biggest lessons we should take from that level? I mean, that debt crisis experience that we had.
Okay, number one, I've always been saying that no country can say they will not borrow. Even at micro level, at you and I level, Charlie, sometimes you are cash strapped and you have to call few friends to sort you out. So no country can say, oh, for them, they will not borrow. Borrowing itself is not a bad idea.
Right.
But you see, when you borrow, you must use the money at a governmental level for projects that can generate positive NPVs. And so you don't borrow and use the borrowed fund to pay salaries for recurrent expenditure.
Right.
And we have seen parts of that in the future.
In the past.
Why, yes. I mean, you borrow from the international capital market and you use part of it to pay recurrent expenditure.
Yeah.
I mean, once you are doing that, you are shooting yourself in the foot, because see, when you borrow and you use the fund for capital expenditure that are self-financing, then you know that, okay, this money I have taken, I have a reliable source for the repayment. Do you get it?
Yeah.
And so, for instance, if you take the Accra Kumasi Expressway, if government decides to borrow money to fund that project, and that road will be tolled, then it means that government shouldn't worry themselves as far as the repayment is concerned, because they will use proceeds from the usage of the road to finance, the facility. And so we must always make sure that we borrowed to finance projects that can generate positive NPVs, of course, so that the repayment will not eat deep into our tax revenue. That is why anytime budget is presented, the first thing I want to look at is what percentage of our tax revenue are we going to use to pay debt or for refinance interest payments. In the past, we've been using more than 40% or 30% to do that. You get it?
Yeah.
So every 1 Ghana cedi that you mobilize as tax revenue, you use about 30 pesos to pay debt. That is not sustainable. You see?
Yeah.
And then one good thing that I mentioned somewhere is that apart from the 2.7 billion bonds that this government has issued, they haven't gone international. So which means that exchange rate volatilities may also not really impact on our debt position. Currently, we are, I think, around 45.3% as at the end of last year. And so we are hoping and believing that it may not shut up, because anytime your debt becomes unsustainable, and that is where the problem begins. And so regarding our debt, I think that we need to tread cautiously. The government has had a lot of footprint within the treasury bill market. That is normal because even now the rates are very low. A reason why for some time now they've been, recorded under subscription.
Right.
However, I still think we need to tread cautiously, not to blow our debt position up, and that will come back and bite us as a country.
I see. Right. All right. Maybe finally on debt, and then we can give our final thoughts. Do you have anything to add to that?
Yeah, I think that's what Nelson said is right. Just what I'll add is that we keep like very optimal external debt levels, because when you check one of the challenge that took us to the IMF, our external debt levels was a considerable part of it.
Right.
When you have very high external debt levels and then your currency position start dwindling, it starts, increasing your debt position at that front as well. So I commend the government for what they've done so far, staying out of the international capital market. I hope that we keep it at optimal levels going forward. And should we even embark on such trajectory, we'll be expecting that such funds will be deployed into high-yielding investment infrastructure projects.
Right. Yeah. Right. Okay. So as we wrap up, maybe your final thoughts. I'll go to Nelson, and then we wrap up in studio. What exactly must Ghana or government begin to do or avoid if we want to break the IMF cycle? That's my final question to all of you. And Nelson, I want you to take your bite, and then Mark Jordan wraps up for us.
Well, I think we've said all already. That fiscal discipline is key.
Right.
Yeah, because that was what actually took us to the IMF. So once you are managing your economy in such a way that you keep on borrowing, then the time comes for us to go back and borrow and people are not interested, then certainly you have a problem. And so we have to continue to be on the path of fiscal prudence in order to sustain and maintain the gains that we have made into the future.
Right. Okay, Mark Jordan, you want to add to that?
Yes, I think when you check the cycle, right, I think about every 3.5 years after we have to, in a way, return back to the IMF. All right. I think it is kind of clear that with the current administration, and I say administration for a reason, because administration is quite different from the political party in power itself.
Right.
What we have is Mahama running, and with it could be NDC in power, but it might not be Mahama with true. Other. Right. Yes. So at least with the current administration, like Nelson mentioned, we have some kind of certainty that we might not be going back to the IMF, and that's clear. So what happens thereafter is how we really manage our debt levels. Right. And then how we're able to mobilize revenue. That's still a challenge. Right. Ghana recently became 8th largest economy in Africa. But yet today, still, our tax to GDP is one of the lowest in the region. Right. So we'll have to really beef up on that end so that we lower the chances of borrowing. And I think with that in place and sustaining the current momentum, we should be able to stay out of it for long.
All right, gentlemen, thank you very much for your time. I'm really grateful for having the two of you this morning to talk to us. So Nelson Kujo Kwagbeji is a financial analyst, and Mark Jordan Tika Nate is a senior research associate at Laros Africa. These are the two individuals who joined me this morning for our roundtable discussion. We've been talking about Ghana's IMF exit and whether we are able to sustain that. And I think it's been a very good conversation. The point is that we need a lot of discipline. We need to also put in place the right legal things so that we avoid running back into this when government changes or when administrations go and others come. And so very important conversation. If you miss any part of it, you are free to visit our social media platforms. We're on Facebook at ZFMGH and on YouTube at Z Multimedia. Please visit and you can play back. All right, so that's our wrap up today on the Business Breakfast on Z. We're back again tomorrow for some more interesting conversations. Until then, please keep listening to Z101.9 FM. My name is Nitra B. Hammond. When you think Ghana, think Z. Up next is The Brighter Side with Jeremy Okoria Mwako. I'll see you tomorrow. Bye-bye.